Okay, welcome back. Today we'll start with our last topic for this video series. So we'll talk about the capital budgeting. The question for the capital budgeting is related to the long-term investment. Suppose say the company wants to build a new building. Then the question asked is, should we build the new building? What's the cost? Then what's the benefits? So the capital budgeting is related to try to figure out the benefits from the project and the cost from the project. So we want to take a project if the benefits is greater than the cost. So that's the basic ideas of the capital budgeting. So if you want to do a capital budgeting, usually it will require a lot of information. The three basic information sets required here. So the first one is initial cost. If you want to start with the project, then what's the cost related to that project? So that is the first part of the information. The second part is the cash flow information. You build the new project, then usually is the project will bring in the money for the company. Then you need to calculate that information. So what's the values, the future values it can bring in? And also, what's the timing of these cash flows? Will you be able to receive these cash flows in next year or the next 2 years? So you need to get to know that information. And the last one is the required rate of the return from this project. The required rate of the return is determined by the two criteria. The first one is, what's the cost of the capital for the company? That is saying, if I get the money from someone else, then how much I need to pay? So that's the first part. The second part is the risk level associated with the project. If the project itself is relatively safe, then I will ask for a smaller required rate of the return. If the project is quite risky, then that usually indicates the likelihood to get the money back is not that good. So in that case, you may ask for the higher rate of the return. If your friends want to borrow the money from you, and he tell you he will use the money to gamble, to buy the lottery, then you will know that is a quite risky business practice, right? So you may ask for a quite high rate of the return. So that's what we say, for the required rate of the return, it should reflect the risk level of the project. So we need to know these three parts of the information, then we will be able to do our capital budgeting. For the most commonly used capital budgeting method, that is NPV value, net present values. So the net present values is try to calculate the present value of the future cash flows. Suppose say we have a new project. Today we need to spend the money, that is a CFO, we call the initial cash outlay. So that's our cost. And for that, when the project started, it will bring in that's the cash flow in the future. CF1, that will be in the first year. CF2 will be the cash flow in the second year. And CFN will be, that's the following years. So if we have this information, then based on our required rate of the return, then we can discount these future cash flows into present value. So all this will be the today's values terms about these future cash flows. So this will be the sums of the benefits that is in present value. In today's dollars terms, what's the benefits could be. And here, we also have the cost information, right? So we put a negative sign there. So we indicate this part is negative. So the NPV value is to calculate the present value of the future benefits, deduct the initial cash outlay, or say the initial cost, then that will be the NPV value. If the NPV value is positive, then it indicates the benefits is greater than the cost. If the NPV value is negative, then it indicates the benefits is smaller than the initial cost. So the simple decision should be if the NPV is positive, we should accept the project. If the NPV is negative, then we should simply reject the project because it cannot bring in the profit for the company. And to show you that how to use your financial calculator to do the capital budgeting, then here we have one example. Suppose you usually go to the fitness center, and the fitness center is considering to buy a new tanning bed. So to buy this tanning bed, they need to have the initial cost. So they need to purchase this tanning bed cost $10,000. So that's their initial cost. And for this tanning bed, it will bring in that additional cash flow for this fitness center. So the first year, the cash flow will be $4,000. The second year, cash flow will be $4,500. And in the third year, $10,000. Last year is $8,000. For the fitness center, it has the required rate of the return, that is 10%. So this is based on, say, for the fitness center, they may need to borrow the money from the commercial banks, right? So they need to pay them for the commercial loans. And also, they need to consider the risk level of this project. So based on that information, they say the required rate of the return should be 10%. So when we have this information, then how can we do the capital budgeting? So next part, I will show you, how to use the financial calculator to do the capital budgeting to calculate the NPV value. So here, to use your financial calculator, there's one new button you need to get familiar. That is the CF. So that is for input the cash flow information. So here, we already got the information, the cash flows, right? So first we start with the CF. When you push the CF, then it asks for the CF0. So this is for the initial cash outlays. So that's your cost. So you input that information here. We got that one is the company need to spend $10,000, right? So you input $10,000. But remember, this is cost. The company has to spend out. So that is out cash flows. So put the negative sign there. So that is for the CF0, initial cash outlay. If you want to input additional cash flow information, you see the arrows here, the up arrows and the down arrows. That is how you can use these arrows to get to the next cash flow information. So when you push the down arrow, then it will ask for the first cash flow information. So here we have the first cash flow is $4,000 in the first year. $4,000. Then you push enter. So that is for the CF0. Then you push the down arrow, the F01. So this one asks you for, what's the frequency of the first cash flow. Remember, this CF1 only occurred once, so the frequency should be 1. So keep that value 1. Then push the down arrow. Then it will ask for the second cash flow. So the second cash flow, CF2, in the second year is $4,500. So we input $4,500, push enter, then push the down arrow. This cash flow occurred just once, so keep that to the F02, just to 1. Then push the down arrow. And then we have the third cash flow, 10,000. Then we push enter, push the down arrow. So that is for the frequency is still 1, right? Just occurred once. Then we push the down arrow, record the last cash flow, $8,000. So here you see we got the last cash flow, $8,000. Then push the enter key, push the down arrow. Make sure this will only occurred once. So here we have to finish all the cash flow information. The next step is to calculate the NPV value. To calculate the NPV value, you see the NPV buttons there, right? So you can push the NPV buttons. It asks you for, hey, what's the interest rates? It is asking for the required rate of the return. Remember, the company decided the required rate of the return is 10%. So you can just input 10. You push enter. Then push the down arrow. So this time say, I'm ready to do the calculation. So the next step is computer, CPT. So when you push the CPT, then it will give you the NPV information. So here, this one tells you, based on the company's initial cash outlay and the following cash flows. So the NPV value for this project, it will be $20,332.63. Apparently, this NPV value is a positive value. So based on the decision rule, when you see a positive NPV value, then that indicates the project is bringing money into the company, so you should accept the project. So that is how we, do a capital budgeting on your financial calculator. So this financial video is just to show you, how to prepare for the BA640 classes. We will still, discuss a lot of the details, how to use the financial calculators, to related to the financial statements and, how to calculate the stock price and the bond price. We will use a lot of the times, we will be, have to relate it to the financial calculator. So first, get familiar with the financial calculator, then your life will be much easier in BA640 class. So that will summarize, conclude, our videos for today's topic.